Hello everybody, this is Toni Turner and welcome to the market now as of about 11 a.m. Eastern on Friday, September 30th. U.S. equities rose sharply today as investors kept a close eye on Deutsche Bank shares following a fall yesterday that triggered a broad-based sell-off in the market. The Dow Jones Industrial Average has jumped more than 150 points so far this morning in late morning trade, with Goldman Sachs contributing most of the gains. The S&P 500 gained about 0.7%, with financials rising more than 1% to lead advancers. And on that note, let's move into three charts that could give us some insight into the week to come. First of all, we're going to look at a chart. This is the last day of the third quarter, so I think this chart is something that we ought to be looking at. We need to look at longer term charts many times and not just focus on daily charts and intraday charts. Longer term charts give us, of course, a much bigger, broader picture, and sometimes that can be really beneficial when we're looking forward. We're looking at a weekly chart of the S&P 500 SPDR, symbol SPY. As you all know, this is the tracking stock that closely follows our S&P 500 index. Now, to get a little perspective here, the SPY made an all-time closing high of $219.50 in August. You can barely see, well, let's see, it might be this candle, this little green one right there. From there, it's pulled back. And when I captured this chart today, the SPY was trading at $215.56, or about $21.55 on the S&P 500 index itself. Now we can see here, if we look left on this chart, and by the way, the moving average on this chart is a nice kind of an all-purpose moving average. It's the 30-week simple moving average. A lot of investors use this as a decision support tool for entries and exits, or for getting a good all-around perspective of the market's strength or weakness. So let's look here. If you look left on this chart, you can see, I just went back 3 years. You can see that the SPY, and we all know, has moved up in a picture-perfect uptrend, actually using that 30-week moving average as a really nice trend line, nice support line, moved right up through 2014, except for the pullback we had that year in September, October. You can see how as price moves up here into 2015, you can almost see how the candles are getting they're getting wider price swings in each one, say, than they had back in 2013 and 2014. Notice how nice and neat the market melted up back then. Then you notice this first pullback down, and now you notice the candles are getting a little taller as the bulls and bears are kind of duking it out in 2015. Then, of course, we had the big move down here. We had the move on, are we raising interest rates this January? The market definitely weakened here, then moved up, of course, the first of this year in February and March, moved back up to its highs around 2010, or 210, I should say, and then back up to 212, which, as we know, if I could draw a straight line, has been resistance, and is currently support. 212 is. That's quite an important number because the SPY has had a lot of trading action around that number. And as you can see, the 30-day moving average right now is coming up. It's just a little over 210, and the SPY is sitting atop that. So you can see the market got a little hitch in its giddy up here for a number of reasons, some of them pegged to interest rates, or the anticipation of rising interest rates. And you can see the market is not as sure of itself here at the moment as it was back in 2013 and 2014. when it was moving decidedly higher, and it was doing so back in 2012 with a little dip in 2011. Basically, since 2009, this market's been going up. So it makes sense it's going to have some profit taking in it at some point. Now, if we look at the 14-week RSI here, we can see that it has pulled back with the recent pullback a couple of weeks ago, actually now, when the market started falling on anticipation of a rate rise. The RSI is still in an uptrend on the weekly chart, although it's a dubious one. The MACD on this weekly chart, the MACD line, the black line, has moved below its red signal line on this weekly chart, but it's still nicely above the zero line, so it's still a positive, maybe with a very small cautionary note attached to it. As long as the SPY can stay above this 212 line, as long as it can stay above its 30-week moving average, we can say it's very strong. If it has to move down below the 212 potential support line, down below its 30-week moving average, down below 210, then we start to take a more cautionary look at the market. Maybe we take a few profits on some of our holdings. If it has to move back down here to the Brexit lows, down to 200, which would be 2,000 on the S&P 500, then of course we are going to get even more cautionary. A 5% drawdown, just for your information, comes in at $208. So that are 2080 on the S&P 500 itself, and that's why I put this cautionary kind of yellow zone here. A dip below, actually it would be 1980 is more the exact number, or 198 on the SPY. A dip below that would be a more serious breach, and that would actually be a 10% correction. So just as long as you know what to look for here, and of course we could have the opposite scenario where the SPY rises up, goes over $219 and tears into the fourth quarter on a very nice uptrend. That could also happen. So we're kind of at an inflection point here, waiting to see which direction this market will take, and as long as we have some idea of what we're going to do at each level, we'll certainly be just fine. Our next stock here is, and this is a stock, not an ETF. It's unusual, but we need to look at this right now. We don't usually look at stocks in this program, but we are today. This is a daily chart of Deutsche Bank. As you know or may not have known, Deutsche Bank made a low. It might have been an all-time low yesterday at $11.19. And the stock market, the U.S. market itself, took a noticeable turn for the worse yesterday, as I said earlier, following the lead of Deutsche Bank. This is Germany's biggest lender. The U.S. market and Deutsche Bank have kind of a symbiotic relationship on the back of a lot of stress for investors who are living with the ghosts of the financial crisis back from 2007 and 8. And so when we hear again that there are hedge funds selling a financial institution, especially a very, very large one like Germany's Deutsche Bank is, it's their largest lender, it's just too reminiscent of the old Bear Stearns and Lehman Brothers scenario that took place back in 2008. I remember it very well. Many challenges right now are facing Europe's financials. And again, after the financial meltdown in 2007 and 2008, this kind of reminder here has made the market jittery. Now, the market with Deutsche Bank's moved back up. If you can see this morning, it moved back up, this little candle here. When I captured the chart, it was trading at $12.32 off its lows. If Deutsche Bank can move higher in the next week and maybe and investors regain some of their confidence in Deutsche Bank, and of course you can also watch the Germany ETF, the EWG. If the Deutsche Bank can move higher in the coming week, that's going to be one positive aspect for the U.S. markets. And hopefully that happens. If it turns around and heads south again and heads below 11, I think that could pressure the overall market. And we have a lot going on here, of course. We have not only the most volatile election season in history, we have this heightened worry about European banks with Deutsche Bank leading. And of course, we're going into third quarter earnings season when Alcoa Aluminum announces on October 10th after the closing bell. So next week we have a lot going on, but I think Deutsche Bank will be in the forefront of it. So keep an eye on Deutsche Bank. I think it will help us gauge the U.S. markets. Our final exchange-traded fund here is the SPDR S&P Insurance ETF. I'm looking at this again. I know we looked at it a couple of months ago. Top components in the KIE is Willis Towers Watson, Principal Financial Group, Hartford Financial Services, AJG, which is Arthur J. Gallagher, and Allstate. Companies like that. They are insurance companies do well if the dollar rises, if interest rates rise a little bit, and we've been promised that sort of kind of by our Fed by the end of the year. At any rate, the KIE has been walking nicely up this particular trend line and its 50-day moving average. Except for the Brexit move down, it's been doing a very nice job of being a steady eddy here. So I'm going to look at the KIE as a potential candidate for maybe a new investment here, but I'm going to watch it for a few more days. It's trading right atop its 50-day moving average, which comes in right now about 73. The KIE is trading at $73.80. As long as it stays above the 50-day moving average and this blue trend line that I've drawn, I'll be interested to see if the KIE can move higher here and start up, maybe going back up to its all-time high back here, which was at $75.11. It was just in August was its all-time high. So I'm interested here to see if the KIE can move up, meet its all-time high, and potentially resume its uptrend from there. However, if it cannot do that, and again, I'm going to watch it. I'm not going to get it today. I'm going to watch it into the coming week. If it cannot, if it sinks below $73, then it will be off my list. Please know that volume is very low today with everything, but volume on the KIE is not the kind of volume you can day trade. So it's something that you would keep more for a longer term hold. Okay, now let's go on to next week's economic reports. But first, please join us this coming Monday online from 4:30 to 6 p.m. Eastern for our next session of Toni's Market Club. This is the perfect place to find out how to handle the market as we go into what promises to be a very volatile month in October and possibly November. We will talk about which side of the market to trade, have a mini trading lesson, and I'll give you stocks and ETFs that may become ripe for high potential trades. This is a low priced, high value opportunity to learn more about the market, become a smarter trader, and make more money. So please join us. If you cannot attend our live session, that's not a problem. The recording of our session is available to all of our members a few minutes after this session ends. And now for this week's economic reports. On Monday, we have the ISM index and auto and truck sales. Not much going on Tuesday. On Wednesday, we have the ADP employment report, the ISM services, and our usual crude inventories. On Thursday, we have the GDP, jobless claims, which is always every Thursday, and nat gas inventories. And on Friday, we have the usual monthly jobs numbers with the unemployment rate, which will be looked at. Please remember to join us for Toni's Market Club this coming Monday. Don't miss out on this fantastic opportunity to raise your trading knowledge and your trading profits. Until next week, keep green on your screen. I'm Toni Turner, and this is the Market Now.